It's not every day you see a market leader, a true giant in its field, suddenly become the underdog. But that's pretty much the story of what happened to Verizon. We're going to break down this pretty surprising tale of its fall and the huge bet it's making on a major comeback.
To really get how dramatic this whole thing has been, one analyst put it perfectly. He said it was like the movie Trading Places. You know, the classic 80s comedy where Eddie Murphy and Dan Aykroyd literally swap lives? Well, in the world of telecom, that's kind of what happened. The once dominant Verizon found itself in the underdog role, while its old rival AT&T was suddenly on top of the world.
So, just how big of a flip was this? I mean, was it really a full-on role reversal? Well, the numbers, they tell a pretty shocking story of just how much Wall Street's thinking completely changed.
Get this is a complete 180. Just 5 years back, Verizon was the clear premium player, right? Its stock was trading at a whole 30% premium over AT&T. Now, fast forward to today, and that's totally inverted. Verizon now trades at a 30% discount. That is a massive collapse in how investors see the company.
And when you look at the total return, that gap looks even crazier. So since March of last year, the S&P 500 did great, right? A solid 27% return. Verizon, it basically just kept pace. But AT&T, it delivered a mind-blowing 87% total return. I mean, Verizon wasn't just lagging, it was getting left in the dust.
So what on earth happened? How does an industry leader fall so far so fast? Well, it wasn't just one thing. It was more like a perfect storm of competition hitting them all at once.
Suddenly, Verizon's fortress started to show cracks. A newly beefed-up T-Mobile came out swinging after its merger with Sprint. At the same time, other rivals were pushing hard into rural areas, a place Verizon used to own. This kicked off a massive price war across the industry, and Verizon ended up having to give up ground, losing over 50,000 of its most valuable customers in a single quarter. Ouch. Okay, but that's just one side of the coin. For investors who love a good bargain, this whole slump has created what could be a really interesting opportunity. So let's flip this around and look at the bull case for Verizon, what the market might be totally overlooking.
All right, the first hidden gem is this number right here, a 6.1% dividend yield. Seriously, in an environment where every little bit of return matters, that is huge. It actually puts Verizon in the top dozen dividend payers in the entire S&P 500. So while you're waiting for a potential stock recovery, you're getting paid pretty well. And it's not just a high yield, it's a super reliable one for 18 straight years. Let that sink in. 18 years. Verizon has increased its dividend payout. That kind of track record just screams stability and commitment to its shareholders, which is exactly the kind of thing long-term, patient investors love to see. So Verizon is basically paying you to wait. But what exactly are investors waiting for? Well, they're waiting for the company's massive new strategy to start paying off, a really bold $20 billion bet on the future of broadband internet. The plan is actually pretty simple and super aggressive. They're going to war with the cable industry. Instead of just fighting other phone companies over wireless customers, Verizon is now going after the cable company's most precious asset, their broadband internet subscribers. And this isn't just some small little experiment. One path that's been talked about involves Verizon putting a colossal $20 billion on the table to buy a company like Frontier Communications. A move like that is designed to instantly add millions of fiber broadband customers to their network, just like that. The logic behind this whole thing is a really powerful three-step play. First, you buy up millions of internet customers. Second, you bundle that awesome fiber service with Verizon's wireless plans. And the result? It creates what the industry calls stickiness. When customers bundle, they're way less likely to cancel either service. That churn, as they call it, drops, and that locks in more stable, long-term money. It's a battle for the whole connected home.
So the strategy is clear. It's powerful. The question for investors is, can a company the size of Verizon really change course fast enough to make it all count?
This quote from analyst Frank Louthan just nails it. At the end of the day, what investors want to see is Verizon start growing its wireless business again. But a move this big, this strategic, it doesn't happen overnight. Turning a company like Verizon is like turning an aircraft carrier. It's incredibly powerful, but man, it is slow.
And that brings us right back to the big question. You've got Verizon paying investors a great dividend to be patient while it makes this multi-billion-dollar bet on fiber. It's a really compelling comeback story for sure. But in this super competitive world, is that plan enough to reverse this whole trading places situation and take back the throne?